Welcome back. Let's talk to David Paul. He's an MD at VectorVest UK. Morning to you, David.
Good morning, Ross.
Right, we've got 4 stocks to talk about in this segment. Let's kick off with the first one, Hastings. What is this type of analysis telling the audience?
Well, first of all, that's my standard layout, the price in the candlestick chart. And above the price, the thick green line is the VectorVest valuation of the share. So every evening, our algorithm, which is 28 years old now, crunches all the financial numbers that we buy from Thomson Reuters and spits out a valuation for the share. And as you can see, the share is trading well below our valuation. That's good. The blue line in the window below the price is our earnings per share measure, and as you can see over the last year, this is a yearly chart, Hastings has grown earnings per share strongly, and as Ben Graham said so many years ago now, earnings per share growth is the engine that drives the share price. So hardly surprising, since our last buy signal, our first buy signal on Hastings, those people that have done what VectorVest has simply told them to do are up 40%.
Right.
Now, over the last month or two, the share drifted sideways in what technicians would call a flag pattern, but a drift sideways to down, which is bullish. The other day, it broke out of that little pattern. On Friday, when the market had a really, really bad day, Hastings was up considerably, which is always a good sign. JP Morgan have just, in fact, woken up to what we've known for a very long time, and they've upgraded the share to a strong buy, and that was the reason it jumped on Friday, I think. The vertical line is what technicians would use to try and measure where the market is going to. That's a thing called a measured move, and I expect that when the general market turns back up and the short-term trend turns back up with the long-term trend, that Hastings has a high probability of moving up the page. I've already added to my position a few days ago, in fact.
Okay, well that's a perfect setup. Let's go on to Trifast.
Well, Trifast is a share that I've been holding for a very long time, for all of this year and a few months of last year. The green line above the price says it's undervalued. Earnings per share growing strongly. That chart's over the last 18 months. Now, it's again drifted sideways in a triangular pattern, and those technicians watching should see the textbook 5 waves within the triangle. It's on a hold recommendation on VectorVest, and I will wait for a buy recommendation from the program, and I shall also wait for the short-term trend of the London market to turn up. And if the short-term trend of the London market turns up and it breaks out of that triangle and prints a buy signal on VectorVest, then I shall be adding to that position.
Understood. Let's go on to Countryside Properties.
Well, Countryside Properties was a share that I talked to when Zach was here, I think, 2 weeks ago. And unfortunately, it's on a buy recommendation on VectorVest, growing earnings very strongly, undervalued. It pulled back with the market sell-off, and it's come right back to where the last resistance is now, I hope, becoming support. And it had a good day on Friday, it had a good day on Monday, and I think that Countryside Properties should do very well from here. Again, I'm waiting for the short-term trend of the London market to turn up before doing anything. At VectorVest, we try to put together the best of both worlds. We're looking for the best of fundamental analysis with the best of technical analysis. And we look at the technical position of the share itself, which on Countryside Properties looks good, and the technical position of the overall market. And at the moment, the overall market is the one that's letting us down. The short term is still down, and I have to wait for that to turn to tick all my boxes. And when I tick my boxes, I get very lucky.
Understood. And let's wrap up in terms of the equities with the last one, Taptica.
Well, Taptica, a small little media company in social media advertising, growing very strongly, as you can see by the earnings per share chart below the price. We've talked about it, and I've talked about it on my blog and here. twice now, and it's broken up twice, and I think it's just about to go again. It's on a buy recommendation, significantly undervalued, growing earnings per share quite strongly, and again, when the general market turns up, I think that that's going to have another run on the upside. As you can see, there wasn't a seller in sight when the general market was falling for 3 days last week, which also always bodes well. It's a small company, and I think that it's well above its stop loss. As you can see, the faint blue line below the price is our VectorVest calculated stop loss, and it's well above that. It's on a buy recommendation, and the only thing we need to wait for now is for the general market to right itself. Was yesterday's move a dead cat run up, or have we now got a trend that's going to move up the page? I think we just have to wait and see today.
Understood. Let's just go to the last slide. Anyone interested in this? Basically, David Paul's email address, david.paul@vectorvest.com. And the website is?
VectorVest.co.uk. And if you go to the website, we have regular webcasts, and we have seminars in central London. We're not having a seminar in August. Our next seminar is just after the holidays on the first week of September.
Perfect. David, we ran out of time. That's David Paul, MD of VectorVest UK. Thank you very much.
Thank you, Mus. Thank you.